Welcome back to CoinFlip. This is the show where we take the boring, annoying money chores and turn them into 15-minute decisions you can actually finish. Today we are talking about the W-4 form. I know, thrilling paperwork. But here's why you should care for about half an hour. Most people set their W-4 years ago, then never touched it again. Meanwhile, Congress passed the One Big Beautiful Bill Act. The IRS changed the withholding tables, and your paycheck has been quietly doing something you did not intend. Think about it this way. Every paycheck, a little chunk leaves your life. That chunk is either a forced savings account with the IRS or a growing problem that shows up as a tax bill next April. The important thing to understand is that many people are now over-withholding. That means you're giving the IRS an interest-free loan while your own goals wait in line. In our first segment, I'll give you the context, why your W-4 was built for a different rulebook, what changed in 2026, and why fixing this now while tax season is still fresh in your head is a low-risk, high-benefit move. Then we'll zoom in on 3 specific rule changes that are quietly messing with withholding accuracy: the higher standard deduction, the expanded SALT cap, and new deductions for tips and overtime. I'll treat those like a menu problem. Your paycheck is ordering from the old menu while the tax system is cooking from the new one. That mismatch is how you end up way off on your refund or your balance due. After that, we're going straight at the risks. Over-withholding, where you celebrate a big refund but your cash flow was tight all year. Under-withholding, where you owe money and maybe even face penalties. Here's the thing. Both problems have the same fix, and it takes about 15 minutes. In the last segment, I'll walk you through a simple plan. We'll use the IRS Tax Withholding Estimator at IRS.gov/W4 app. Pull your numbers together, click through the questions, and download a filled-out W4 you can send to payroll. No spreadsheets, no memorizing tax brackets, just a short checklist so your paycheck lines up better with your real life. If you got a big refund this year, or you were surprised by a tax bill, this episode is for you. You do not need to fix your entire financial life today. You just need to fix this one lever. Now, let us consider the background. What changed in 2026? How do we get here? And why is your set-it-and-forget-it W-4 no longer safe? That is our first segment, right after this. When did you last look at your W-4? Be honest. If you cannot remember, you are in the majority. Here is the uncomfortable part. The form you filled out before 2026 was built for a different tax law. According to the IRS, the One Big Beautiful Bill Act changed the standard deduction, added new deductions, and shifted SALT rules starting January 1st, 2026. But your payroll system, in a lot of workplaces, it just kept cruising on the old assumptions. Same boxes, same math, different world. The important thing to understand is that your W-4 is not a tax bill. It's a guess about your future taxes that tells your employer how much to skim off each paycheck. And right now, for millions of people, that guess is wrong in the same direction. According to the Tax Foundation, the One Big Beautiful Bill Act lowered individual income taxes by roughly $129 billion for 2025 alone. The IRS has also said the withholding tables did not fully catch up in 2025 after the law passed. Think about it this way. All year long, a lot of workers have been giving the IRS an interest-free loan. You know what's fascinating? Nobody notices because it shows up as a nice refund. It feels like a bonus, even though it's just your own money being sent back late. When I was 26, I read every personal finance book I could find and got so twisted up chasing the perfect plan that I did nothing. No 401k, no savings, nothing for 2 years. That's the same trap with the W-4. People worry about doing it perfectly, so they don't touch it at all. Meanwhile, every paycheck is slightly off. Here's the thing. This is one of those rare money tasks where almost any thoughtful update beats years of inaction. Being roughly right is better than being precisely wrong for the next decade. Now let's consider timing. You've just filed or you're about to. Your attention to taxes is at its yearly peak. By June, your brain will file W-4 under future me's problem. So the key insight here is simple. While the law is fresh and your numbers are in front of you, this is the moment to fix the form that controls every paycheck you earn this year. If the form is off because the rules changed in 2026, what exactly changed under this new law that's breaking everyone's W-4?
Think about it this way. Imagine your favorite coffee shop quietly raised prices, but your app kept charging last year's menu. You'd either be overpaying or underpaying every time, right? Your W-4 is that app. The menu changed in 2026, but most people's settings did not. According to the IRS, the standard deduction jumped from $16,100 if you file single, $32,200 if you're married filing jointly, and $24,150 if you're a head of household. Those are big jumps. Here's why that matters for your paycheck. A higher standard deduction means the tax system now assumes more of your income is shielded. If your W-4 was built on the old, smaller numbers, your employer is probably pulling out more tax than the 2026 rules expect. So you get a bigger refund later, but your budget is tighter every single pay period. Does that trade-off still feel worth it when you frame it that way? Now, related to this is something that mostly hits people in high-tax states. Either you are overpaying because your tuition isn't officially listed as a standard deduction, or you're underpaying because the system doesn't know whether your parents still claim you as a dependent. That first question tells the payroll system to adjust for your tuition. The second makes sure you're not double-dipping on a personal deduction. So, if you live in a high-tax state, earn a lot of tips or overtime, or you just know you will use that higher standard, earn a lot of tips or overtime, or you just know you will use that higher standard deduction, your current withholding is probably out of sync with your real 2026 tax picture. Speaking of being out of sync, this all sets up a bigger question. What happens if you shrug and ignore these changes? In the next part, we will talk about both sides of that, the quiet cost of over-withholding and the very real penalty risk if you slide into under-withholding instead. Now, flip this on its head. There are really two W-4 situations that should make you nervous. First one is over-withholding. Think about your paycheck like a group chat. Everyone who needs your money's in there. Why is the IRS the loudest voice, grabbing extra cash every 2 weeks and then sending it back months later with zero interest? According to the IRS's Tax Withholding Estimator, a single filer who never touched their W-4 after the 2026 standard deduction bump may be sending in hundreds more than they owe this year. Hundreds. That is grocery money, debt payoff money, fund money. And the government is basically saying, thanks for the free loan. So the key insight here is, if your refund was chunky and your life did not change much, you probably over-withheld. That feels safe, but it's just very organized procrastination. Second scenario is the one that keeps people up at night, under-withholding. This is you if you drive Uber, sell on Etsy, have 2 jobs, or picked up those new deductions we talked about but never told payroll. You look fine on each paycheck, then April hits and the bill is way bigger than you expected. According to the IRS rules, they can charge an underpayment penalty if you end up owing more than about $1,000 and your withholding missed by more than 10% of your total tax. That's when oops turns into a line item on your return. You know what's fascinating? Most people in that spot did nothing wrong on purpose. They just never updated a form from years ago. I think about my dad here. He never optimized anything, left plenty of money on the table, still retired okay. So no, one sloppy W-4 will not ruin your life. But if the fix is a 15-minute tune-up, why keep handing out interest-free loans or risking penalties? The good news is the remedy is baked in. The IRS built a free calculator that does the math for you and even prints a new W-4. In the next part, we'll walk step by step through that estimator so you can change this once, then get back to your life. Shifting gears fast. Open your phone if you can. Type IRS.gov/W4 app. According to the IRS, that tax withholding estimator was updated in March to reflect the one big, beautiful bill changes, including the new standard deduction, plus those tip and overtime deductions. So this is the right tool for this year. What do you need? 2 things. Your latest pay stub, last year's tax return. That is it for most people.
The IRS says it can take around 25 minutes for complex situations, but if your setup is simple, plan on more like 15. You answer the questions, and at the end, the estimator gives you a filled-out W-4. Think of it like a Mad Libs version of the form. Download that W-4, send it to HR, or drop it into your payroll portal, and you are done. The IRS says the change hits your very next paycheck, no waiting for some window to open. Here's my rule of thumb. If your refund was over $2,000 this year and your life has not changed much, you're probably over-withholding. Run the estimator. And please, do not turn this into a 4-month research project like my old index fund client. This is the rare money move where speed beats precision. Take 15 minutes, fix it, and let every paycheck get a little smarter from here.
Think about it this way. Today was really about one simple idea. Your W-4 was built for an old tax world, but your paychecks now live in a new one. That coffee app analogy sums it up. The menu changed in 2026, but most people's settings never did. Your W-4 is still ordering from old prices. So the key insight here is that over-withholding is basically an interest-free loan to the IRS, and you are the one funding it. You wouldn't tip your barista 30% by accident every day, but a lot of people are doing the equivalent with their paychecks. Now, let's consider what you can actually do with this. One sentence takeaway. A 15-minute W-4 check now is worth more than years of shrugging and saying I'll deal with it next tax season. Here's your quick checklist so you can hit pause on overthinking. 1. Go to IRS.gov/W4app. 2. Use the estimator with your latest pay stub and this year's return nearby. 3. Download that pre-filled W-4 and send it to payroll. That's it. No spreadsheets, no tax degree required. Just a small correction that can turn a fuzzy tax situation into clearer, more predictable paychecks. And remember that higher standard deduction we talked about earlier. That's the system quietly assuming more of your income is shielded, which means your old W-4 can be more wrong than you think in either direction. If you're nervous about under-withholding, use the estimator conservatively. You can aim for a small refund instead of trying to land on zero. Does that make sense? The next thing to understand is that this isn't a forever decision. You can update the form again if your life changes. New job, marriage, kids, side income, all of that is a new chance to tweak instead of starting from scratch. So here's your micro assignment. Before you forget this episode even happened, put a 10-minute block on your calendar labeled W-4 check. If you actually do it, your future self gets the raise. Made a decision today about your W-4, or at least scheduled time to? That's a win. Subscribe so you're ready for the next money decision we work through together. Got a money choice you're stuck on? Drop it in the reviews. Tell me the situation, and I might flip a coin on it next week and walk through both sides. Thank you for listening to Coin Flip and for caring enough about your money to stay to the end. Take care of your W-4, take back your paycheck, and I'll see you in the next episode.